Hi everyone and welcome to the Panic Drop channel. The main question today is whether the market has bottomed or not. Well, today we're gonna check one simple indicator to see if the market could make a new low or not, or what are the probabilities that the market will make a new low or not. So for this indicator, we need to be on the daily chart for the S&P 500 and plot in the 50 and 150 moving average. Now, this indicator will only flash a signal whenever the 50 moving average crosses above the 150 moving average after a bear market. So anything bigger than a 20% drop. And both moving averages has to slope up. As you can see, there was a signal on the 9th of January here because both moving averages were sloping up, and this is after the long bear market we had last year. But first, let's go all the way back in time to check if the market has made a new low after this signal had flashed. We'll start in the year 1962 because that's when Tradingview started to make accurate price charts for the S&P 500. So first criteria to check is whether the market dropped around 20%, and it did. It was around 30% that time. Next, we want the 50 moving average cross above the 150 moving average, and both have to slope up, and that's at this time. And now we can check whether the market has made a new low since. And as you can see, it went all the way up and didn't touch the macro bottom then. So I will write down that's 1 out of 1 valid signal. Then we had one signal triggered in 67 and in the year 70. But as you can see, we had a bear market in the 70s as well. And this one went lower as the previous bottoms in the year 67 and the 70s. From the low in 66 to the low in the 70s was around 1300 days. And from the low in the 70s to the low in the 7040s was around 1570 days. So that's actually a long time before the new low was made. But to be correct, I will write down it's only 1 out of 3 signals valid. Then you had this bear market starting in 73, which came all the way down and made a low in 74. So that's 2 out of 4 valid signals. This bear market fell around 20%, and then we had a signal in 78. And as you can see, the market didn't went below this bottom. That's 3 out of 5 valid signals. In the 80s, the market fell around 21%. We had a signal here and the market didn't make a new bottom since. So that's 4 out of 6. A few months later, the market had another bear market and it fell 30%. There was a signal and the market never went below it. So that's 5 out of 7 valid signals. In 1987, the market fell 36%. There was a signal here, but the moving averages only started to slope up a few weeks later. And then we can see the market went never lower below this point. So now we have 6 out of 8 valid signals. In the 90s, the market fell around 20%. We had a signal here, and you can see it went up and never touched this bottom again. Now we have 7 out of 9 valid signals. In 98, the market fell 23%. We had a signal here, and it never went below the bottom here. In the 20s, the market fell 50%. And then we had one signal here when the moving averages started to slope up. These one weren't valid because the moving averages weren't sloping up. And this one neither. So only this one is a valid signal, and as you can see, the market never went below the lowest point in the bear market then. In the 20s, the market had a big bear market, and you can see this signal was invalid because afterwards we had another big bear market and it went actually lower than this bottom. But it took around 2,300 days to form this new low. So right now I'm counting 8 out of 11 valid signals. So like I said before, we had a crash in 2007. There was also a small bear market in 2011 and also in 2015. All of them had a valid signal and the low was never breached. So right now I'm counting 11 out of 14 valid signals. Next, there was this bear market in 2018. There was a signal here, but with the COVID crash, there was actually a lower low breaching this macro bottom. And this was around 1 year and 100 days later. And so far, the bottom from the pandemic hasn't breached yet. So in total, we had 16 signals and 12 of them were positive. 12 out of 16 means that there's a 75 probability the market won't breach this macro low. So that's quite high, but there is still a chance. Bulls are in favor, but I will always have some cash reserve in case the market drops lower because you never know what's going to happen. That's it for today. I hope you enjoyed this content. Make sure to like and subscribe and see you next time.